All right, so some people that I talk to think that the best low down payment program out there is the FHA 3.5% down loan. That's if you're not taking a special mortgage program like the Maryland Mortgage Program or Virginia Housing that will give you a grant or a second loan to cover for an extra 2 to 5% of the purchase price on top of that. But I've heard this a few times that the 3.5% FHA is great, but it doesn't necessarily beat the 3% down conventional loan. Now, I think that thinking the FHA loan to be more popular might be because the conventional 3% down loan is a relatively newer option. The 3% down conventional loan was only made available by Fannie Mae for the first time in 2016. Then it spread like wildfire soon thereafter. But there are a couple structural differences with these loans. Obviously, the 3% down conventional loan is going to have lower down payment by 0.5%. Then with all FHA loans, there's a 1.75% funding fee, is what it's called, added to the top of the base loan amount. Now that's a lot. Okay, that's 1.75% of the loan amount, not the purchase price. And aside from that funding fee, closing costs would be about the same for both loans, but still that's a definite disadvantage for the FHA loan. But then after that, you'll want to compare the monthly payments for the two. The loan for the conventional option will be a tad higher, which has a marginal effect on the monthly payment. But then rates will be different between the two, so you want to compare those. And mortgage insurance will be different, so you want to compare those too. Just know that the conventional MI can come off a bit sooner and easier if you have the home value increase or you pay down your balance faster than required, or if that balance just hits 80 or 78% in the life of the loan. But generally, when comparing monthly payments on these two, the lower the credit score you have, the more you'll be incentivized to take FHA. And the higher credit score you have, the more you'll be incentivized to take conventional loan. That's just what we usually see as lenders. The FHA interest rate doesn't vary as much from what I see based on high or low credit score. And then on the other hand, the conventional interest rate actually does vary pretty substantially based on if you have a higher or lower credit score. And then same goes for mortgage insurance. The FHA mortgage insurance is unchanged by your credit score. But with conventional mortgage insurance, credit scores will significantly increase or decrease your payment, whether your score is low or high. Long story short, it's not that one is better than the other. It's going to depend on your unique situation. So only once you have an application in, we see your credit score. We give you a full estimate for a house that you're looking at. Only really then can you decide what's better for you. But guys, if you know somebody who wants to buy a house that doesn't have 20%, which again is no big deal, of course, please show this to them and stay tuned for more. Thank you.